Hi, my name is Jeremy Bush. This is Jared Van Vark, and we're with Keystone Financial Services here in Loveland, Colorado. And today we're bringing you part of our educational series on some basics of finance. Jared, I hear you got some questions today.
Yeah, well, Jeremy, I'll be honest. I recently graduated college and I've got a lot of student debt, I'm not going to lie. How can I be sure that I'm going to pay off that debt one day? It feels like I'm literally never going to pay it off.
Yeah, Jared, debt can be a really tough thing to deal with, okay? I guarantee you there's a vast majority of Americans out there who are struggling with the same situation, probably have been a lot longer than you as well, all right? Now, the thing to remember about debt, okay, is that there are different kinds of debt, okay? There is good debt versus bad debt. So, for instance, what does that mean, right? What's good and what's bad? All right. So now everybody kind of looks at debt, I think, vast majority of people anyway, and they're like, bad. Well, isn't that all debt? And they're like, well, not necessarily, okay? For instance, your situation, you said student loans. Now, student loans are probably going to be one of the biggest debts next to a mortgage that you'll ever really have in your life. But that doesn't necessarily make them bad, okay? So student loans, I'm going to put over here. And the reason I do that is because student loans are usually very, very low interest, okay? And they give you various means of repaying them over time. Now, does that mean it's a good debt? Do I want to hang on to it forever? No, okay? Eventually, yes, we do want to pay these off. But these are things that we can use, like I said, very low interest, really flexible payment terms. This is something that can actually help you build credit over time. Okay. The other kinds of things like good debt that I put over here is like a home mortgage. All right. Basic idea being that as long as you are living within your means and you're spending less than you're making, these kinds of debt are not necessarily the worst things that can ever happen to you. All right. So what does that make bad debt? Bad debt, I'm just going to come out and say it. Credit cards. Really, anything that is a revolving line of credit, okay? And so what that means is a credit card's a good example of this. You have a line of credit, you pay some off every month, maybe you put some more on, you make a payment, you charge some more stuff. It's one of those things that just kind of does this over time, back and forth, back and forth. The more you do that, you're never going to pay it off, all right? These also tend to be a lot higher interest, all right? Typical credit card percentage rate, I think, is upwards of the 29% APR, okay? Where these, I think last I checked, it was somewhere around 6 to 7, something like that. Maybe
a little better.
Maybe better, maybe less, yeah. Current mortgage rates, Fed just raised the rates. I think we're up to about 4.5% on mortgages roughly right now, okay? So definitely different types of credit. And how you use them over your life is really going to determine how you manage your debt, okay? Now, then that comes out the question of, okay, how do, should I be saving? Should I be paying off debt?
Right.
What's the
I've got all
balance
this
there?
student loan debt. How am I supposed to save and pay off the debt?
Yeah, and that gets to be a tough one. So first and foremost, start with a budget. Okay, build yourself a budget and stick to it. Now that sounds really, really oversimplified, but again, the idea is that you are spending less than you are making. As long as you can do that, then we have some room to work with. Okay. Starting off, always build yourself. You're going to have this, and this is going to be a long time that we're working on it, okay? Make yourself a budget. Make sure you're spending less than you're making, all right? Then create yourself an emergency fund. In that emergency fund, we want a minimum of $1,000, all right? And that doesn't mean you have to just pull out $1,000 on that first paycheck and throw it in an emergency fund, okay? That can take a couple months to build up. However long it takes you, that should be priority one, okay? Once we have priority one of the emergency fund set up, then we can start to talk about, okay, what do I need to do about paying off this debt? Because if you don't have this emergency fund, what's going to happen is something's going to happen. Say something happens to your car, or something happens to your house, you need to fix it. Guess where it's going to go? It's going to go on that credit card.
That's probably
and you're
true.
just going to get deeper and deeper in debt. Okay, that's why that emergency fund is so important to have. All right. Now, depending on how much debt you have, and if it's good or bad, probably a combination of both. There is still one other thing that I would urge you to do as far as saving your money. Okay, and that is if your employer offers a 401k with a match. All right. Now, the importance of that 401k is that one, time is on your side, so the more you can put away at a young age, the better off you're going to be. Okay, let compounding do the work for you. And two, if they offer a match, usually somewhere between 3 and 5%, that can vary depending on employer, that's free money that they're going to be giving you. If they offer 3%, you should be putting in at least 3%. Okay? At the very least, you should be putting in whatever it is that they'll match you just to get that for now. Okay? If that's how you have to start, even if it's the bare minimum at 3%, by all means do that. Okay? Anything else you have as far as debt, there's a concept out there, it's really, really popular, created by Dave Ramsey. It's called the debt snowball. All right? Now the debt snowball says we're not going to look at interest rates per se. We're going to look at the smallest balance to the biggest balance, and you start basically paying off the smallest balance first, and then take the payment that that small balance was and move on to the bigger ones.
Oh, okay.
So for instance, say this is 200,000. Okay, this is maybe another 100,000. This is 6,000. Okay, probably have a couple cards, whatnot. Most people usually do. All right. So the idea then being is that you start at that lowest one, even if that's the highest interest rate, lowest interest rate, doesn't matter. Start at this one, making minimum payments on these other ones. Okay? So you're continuing to make the minimum payments because you don't want to default on your debt. But anything extra that you have that's above that goes into paying that off. When that gets paid off, you take the payments that you were putting on this one and you go to the next one. Okay? And so then you're making bigger payments on that while you're still making the minimum payments on the biggest ones. It snowballs, that payment gets bigger and bigger over time. It's just a really great way to ultimately get yourself out of debt.
Awesome.
All right?
Sweet.
And so with that in mind, really the important thing is credit cards, they can be useful to a point. Again, if you use them correctly, they can help you build your credit over time. I know plenty of friends and have talked to multiple people who they tried to avoid credit cards entirely in their life, and then when they went to go for a mortgage, the bank's like, sorry, you don't have any credit history. We can't give you a mortgage. So it's one of those necessary evils. I'm going to put it into that category. And credit cards are a bit of a necessary evil, but as long as you use it right, meaning you're still continuing to live within your means, you're spending less than you're making, you're paying it off every month.
Okay.
You know, you're using it more as a tool than as a means to live.
Gotcha.
Okay? Keep it under control and don't allow credit to make you start living outside of your means.
Okay.
Is the basic idea.
Understood.
All right?
Awesome. Well, thanks, Jeremy. I'm feeling a lot better about my student loan debt now, so I think one day I actually will be able to pay it off.
Someday you will, and it's going to be a great feeling, my friend.
Awesome.